CIMB Group Holdings is now ready to accelerate, armed with its new strategic plan called Forward 30. The Edge's associate editor Adeline and writer Hazim talk about the lender's new strategy.
We did an interview with CIMB Group Holdings Berhad's Group CEO Novan Amiruddin. He came across as very enthusiastic and driven. So it's quite clear that he's passionate about this plan. And he actually comes from an investment banking background. So when he was chosen for this role, quite a number of people were a bit taken aback. But because, CIMB is also about consumer banking, it's also about commercial banking. But he admits he's been on a steep learning curve and he's enjoying the challenge.
Now with Novan at the helm, what is the group's intended course?
It's interesting because in this new plan, he says he's ready to accelerate. If you recall, in the mid-2000s, CIMB went on a massive acquisition spree. They spread out into the region. And then over the last 5 years, it was really all about integration. And now that they've done it, he feels that the group has earned the right to undertake M&A again. So he's open to M&A in the next 6-year plan. They don't have to grow via M&A, but they're open to the possibility. And he says it doesn't have to be one big M&A, it could be bite-sized opportunities. So that would be something interesting to look out for in the next 6 years. The other thing about the plan is that CIMB plans to allocate captive capital where they're getting the best returns. Now, for them, that would be Indonesia and Singapore in particular, but also Malaysia, he says. So it'll be interesting to watch those markets as well. And he did go on a little bit about Indonesia because as much as there are strong prospects in Indonesia for CIMB as well as other banks, it is also a very tough market because they're facing tighter liquidity. And so that would have an impact on net interest margins.
So what do analysts think of CIMB's ambitions?
Analysts largely think that CIMB Forward 30 plan is achievable. It's not too ambitious for the bank because they already have all the targets that they wanted to strengthen the position as an ASEAN bank. So previously they have the Forward 23 plus, which most of the targets have achieved. So this is like a complementary to the Forward 23 plus. But analysts thinks that there should be a few risks for the plan, which is the global uncertainties, the geopolitical risks, and mostly on the parts that they wanted to strengthen in the Indonesia and Thailand, because these two countries have a higher liquidity risk. So these two countries must be a bit harder for them to achieve the targets. But overall, most analysts are positive on that.
Like many blue chips, CIMB has seen its shares under pressure as fears of an all-out tariff war rattled global markets. But Anes says analysts are still upbeat on the stock.
So investors should note that CIMB remain a strong player in ASEAN markets, as ASEAN banking, because one of it is the bank commitment. They wanted to maintain their 55% dividend payout. So this is good if you are looking for dividend stock. So CIMB is a good place for you to invest in. The fundamental of the bank itself, it remains strong. If you see the growth, if you see last year they pay the highest dividend, they deliver highest record earnings. So nothing much to worry about that. If you were looking for dividend, they should be delivered. Even the CEO of CIMB Bank, Novan, already promised that if good year for them, then they will deliver higher dividend.
Bloomberg data show that 17 analysts have a buy call on CIMB's stock and 4 have a hold recommendation. There are no sell calls.